Meditators, welcome to another episode of the Market Meditations podcast. Special treat for you today. We have another guest over from Messari. Diran, thank you so much for joining us. Welcome.
Thank you for having me, Karash. I'm super glad to be here.
Likewise, glad to have you, especially given our last episode with Ryan was amazing and he speaks so highly of his team at Messari as well. So really awesome to have you here. Would love to know how your journey started, how you got into working at Messari, what was your journey into crypto in the first place as well?
Yeah, for sure. So I come from a data background. So I build data analytical platforms at Microsoft and Palantir. And I sort of heard of Ethereum in the pre-alpha stage in 2014 or so. But honestly, I didn't think too much of it. I thought it was a grandiose idea, it was a bold move, but I didn't think it would go anywhere. And fast forward a couple years later, 2016, end of 2016, I heard the DAO had been hacked for about like $50 million. And I was like, whoa, this technology that I didn't think much of it was hacked for so much. There's probably something here. Let me take a look at this. So 2017, I sort of dove headfirst into this and spent pretty much all my nights and weekends in crypto, building side projects, meeting people in the space, collaborating with a couple teams. And I also sort of got to know the people in this space where I just felt there was so many smart people working in an area that felt fairly new, which is the concept of owning your own assets. So going from a place where everyone is beholden to some sort of entity to a technology where anyone can gravitate to. Like I own my own digital asset, and it sort of reminds me back to sort of the anecdote of my grandparents of stashing some money away under the bedroom because they want to save it for a rainy day. And that concept really appealed to me. But 2017 also was the era of the ICO boom, and there's just so many scams out there. And it's very hard to build in a space where it's so noisy. And for me, the trajectory that I was going was either I would build something that would give more data integrity, or find a vision that is sort of in that vein. And when I met with Ryan in 2018, the vision of Messari of organizing information in this crypto space, taking in the fire hose, but outputting a curated version for a professional audience, that really appealed to me. And that's how I guess my journey really unfolded from there.
Wow, what a story. I love the fact that someone stealing was what incentivized you, because there's that saying where like if it's worth stealing, if it's not worth stealing, it's not worth having, that they often say. So like that someone wants it, there's a reason they want to go to those measures to take it. And a very interesting way to capture your attention. Now, you did a very interesting transition coming over from very sophisticated company like Microsoft over to the crypto industry, which is just a whole different world. What made you okay with taking that risk? Because obviously you're going from a very steady, stable job with a clear future into a very risky industry that at the time that you came in, we didn't even know was going to succeed. What thought processes went through your head? How did you come to that final decision?
Yeah, for sure. So I was in a very good position at Palantir. Palantir had exploded. I had been there for 4 years or so, and 2017 was my 5th year at Palantir, where I had a lot of freedom. I could do pretty much whatever I wanted at the company. But there was something that really just dragged me towards it, which is I was building analytical platform for problem sets that weren't mine. So I would solve pretty big, complex problems, but in certain cases, I wouldn't be able to see even the end user using it, either because it's from a governmental perspective, or from an enterprise perspective, there's an added layer of security, but also an added layer of indirection. I wanted to build something that solves my problem, and solves something that I can really relate to. So I spent really the entire year of 2017 tinkering and sort of figuring out what would that be. And that's why it took me so long as well, is the space is just so wild. And there's also projects that comes and goes. And I really wanted to find a place that intersected my capabilities, but also my interests. And that is the intersection of data integrity, the security portion of giving sort of information at a professional level, and not sort of giving subpar information that could lead to potential loss of funds, but also adding some context to this space. And the intersection of that really drove me, and I just had to jump on this journey, because at the end of the day, if I look back on this when I'm 80 years old, and I could have just a very pretty clear set path down the traditional big tech world, but there's always going to be that what if. What if I did something bigger? What if I took some risk? And what if I helped shape, just in a tiny little bit, this emerging technology that feels at the brink of changing how humans behave and how we interact in a digital world?
Terrific answer, and it gets me excited to dive into the data side. I liked how it was a very deliberate risk. You found an intersect between what you were interested in and what you wanted at the time, as well as your skill set was extremely suited to what you wanted to do in the space. I know a lot of our listeners are in a similar position. From the messages I get, loads of people are looking to come into the space, but they're either worried about the risk or they're worried about not having the right skill set to add value to the space. Yours was a pretty, I'd say, great fit for the space, perhaps more so than a lot of other people. But what I'm curious about is how you made your decision to join an existing company in the space rather than come in solo. You've seen so many people launch their own data platforms, just building it up from the ground up themselves. What made you want to join a team rather than do it yourself?
Well, to be clear, Messari, when I joined, there wasn't much of a team. I joined as the first engineer, and we pretty much built everything from the ground up since then. But the idea, I think, remains the same, of finding something that appeals to you in the intersection of what you're good at and where there is potential. For me, my skill set was data analytical platforms and data in integrity, and there's a clear potential and need of curation in this space, of having some layer of professionalism that people can make sense of what this space is, and how do I allocate my funds is one, but also how do I educate myself and dive deep into this rabbit hole.
So probably not as deep an understanding as you have, but my background is mathematics, specifically statistics at university. My final year was multivariate analysis and statistics, from what I can remember. A lot of data, I can see, taken my understanding, which is a bit more than the average person in the space, is misused and misleading. X equals Apple is the equation they tend to draw from different sets of data. So something I'd love to do during this episode is a little bit of myth busting and a little bit of directing people's attention to the right sort of data, the right sort of things they should be looking at. So starting with the fun part, the myth busting, what sort of data do you think is poorly used right now and should really be looked at under a much more careful lens?
Yeah, so the way that I bucket data is there's two categories, very broad: qualitative, quantitative. Qualitative data taken to the extreme, this is the white paper data. We've seen that in the ICO stage. We've seen that last year as well, with people pushing out based off of hype around NFTs, around tokens, around DAO.
Sorry to interrupt, Diran, but could you explain qualitative a little bit more before progressing?
Yes, of course. So qualitative data is anything that is, let's say, textual. So data that is describing something as opposed to numbers. So quantitative, very much numbers, number crunching, you can build models on top of it. Qualitative is the description type of thing. But I'll give a couple of examples. There's the white paper that describes what a project would do or what a project is doing. There's the Discord side of things where you have the community coming together and talking about various things, sharing a project. There's Twitter, there's forums. So all of that is qualitative. And on the other extreme is research. So curation, research, breaking down, and that has a lot of analogy to traditional finance as well. So in terms of the myth busting, I think we're still at a phase where so many projects are raising a lot of money based off of hype and based off of credentialing as opposed to tangential work. So if in the show business there's the show don't tell saying, we're very much in the tell don't show phase in crypto, where the intersection both just crypto is a very weird space because it's an intersection of three different things: crypto economics, network effect, and technology. So in terms of crypto economics, if you purely read the white paper and take it as face value, or if you purely jump on Discord and Twitter and take those as face value, you're only getting the credentialing. You're not thinking about the secondary, tertiary moves that people would make. And that also ties into the quantitative side of things. Quantitative, just purely ingesting data from on-chain, there's way too much information. Purely getting all of the matrices that are coming through, there's so many matrices at this point, and we're sort of, it's both good and bad that we're operating in a completely open and transparent space. But unless you know what you're looking at, it's very hard to find the trends necessary to guide you to make a decision here. And going back to the crypto economics, it can feel like a 2-3 dimensional chess where most of the people will be playing the one-dimensional chess or playing one-dimensional checkers, and they take it at face value. But the people who are thinking 2-3 steps ahead of how this would behave in a game theoretical way, of if most people behave in this way, what are the edge cases that I can take advantage of? Those are the people that take the lion's share of the profit, and the rest of the people are left holding bags. So I feel like there's a lot of education that is still needed in this space, but also just general awareness that if you just go with the trend, most likely you're being on the other side of a good trade.
So many good points to break apart there. Thank you for the myth busting and the nice distinction between qualitative and quantitative data, which is extremely important. What I really enjoyed was your description of the data analysis. Is you're trying to play this 3-dimensional chess, not 1-dimensional checkers. And I see so what's ended up happening, which is quite terrible, is with regards to certain forms of analysis, it's actually very profitable to play the 1-dimensional checkers, because if the end result of your data from 1-dimensional checkers is that Bitcoin or crypto is bullish, you can then market that. And there's this just cognitive dissonance where people just see it and they want to believe it. So they'll take that one piece of data, believe it, and then move forward, assuming because one on-chain metric says something is slightly bullish, that isolated variable, and then go on to agree with it. Now, do you, one, agree with that sentiment that is being used in the space? And two, how can we spot what is just an isolated variable that's just more marketing rather than a real analysis, and differentiate between good and bad there?
Yeah, I think there is, so taking a concrete example, uh, traditional finance, there's technical analysis and fundamental analysis, and there's definitely gains to be had for technical analysis, which is, hey, this is the trend that I'm seeing, this is where it's going. I personally don't know how to use that tool, and maybe a lot of it is more hand wavy. But I think the game is probably different in a bull market versus a bear market as well. So in a bull market where the all boats rise as the tide rises, it's much easier to go with the flow and use those confounding variables, or just feel like, oh, this is generally going up, I'm just gonna follow the market. I think there could be a play there. And I think certain people can do well in that. But there's always a caveat there where you don't know when it's going to fall, but also you don't know, you're sort of beholden to others playing the game the same way. If someone perceives a slight variation of this, so taken to the secondary that dimension, then that person can pretty much take all of the profits away, and leave you holding the bags. So it's a very risky game to play, and it almost feels like just gambling, right? Like I see numbers go up. I'll place my bet here, thinking, all right, the likelihood of the next time that the dice rolls is going to be, I don't know, a 6 is going to be higher because now I rolled a 5 or something like that.
Yeah, I mean, I'd like to think that we can find opportunities for positive expected value gambling within the market, without a doubt. Anything where we're taking on risk, there is, we are gambling, trading or investing, or even someone choosing to work in the crypto sector is to some degree gambling, because you're betting that the industry is going to succeed or disproportionately outperform in terms of monetary growth, or in terms of going in a direction where you're going to enjoy that work more and more. So there is a huge degree of gambling, and I think where you want to focus is how can you skew the odds in your favor, what advantages can you take, and what we've spoken about, what sort of data to avoid, a little bit of myth busting. Now let's hone in on, okay, how can I be the person playing 3D chess? What sort of data in the crypto market right now is overlooked? What should I be focusing on?
Yeah, for sure. I think for the majority of folks, going to one of the platforms for quantitative data and qualitative data is probably the best bet as a starting point. So qualitative data, Delphi Research does a great job. The blog that does a great job at doing these in-depth analysis on, hey, what a token is, how do you conceptually think about this space. Messari also has a bunch of research around this. Quantitative, Dune, and Dune has been very popular in terms of, hey, these are the analyses that the community has created, and you can follow sort of how the analysis, which I would think is the secondary the derivation, how those analyses are being perceived in the community. Nansen also does a great job. So I would say the starting point is curation layer. So start from a curated data source, figure your way out, understand how the community is thinking about this, and then all the way on the other side of the spectrum, see how the whales are behaving on the on-chain specifically. I think if you want to extract the most amount of data, it's okay to be rugged. I think everyone gets rugged once, and that's okay. It's probably a great learning lesson. But two, if you do get rugged, it's not the end game. Learn about that experience and figure out how the whales went and made money when I lost money, for example. And because everything is open, everything is on chain, after someone makes a play, it's very obvious the move that they've made. So by looking at that move and thinking retroactively, you can understand the crypto economics that you might have looked over in the initial analysis, and understand how people are thinking in this space in terms of the game theoretical side of things. The second element that I talked about is the network effect. The network effect is very nebulous and very noisy, but getting a sense of how the community is thinking about a certain project. That is through Discord, through Twitter, through Telegram, just getting a sense of, are people in it for making a quick buck, or are people in it to grow the community and invest into it? And the third aspect is the technology. Nothing will work unless the tech is good. And that aspect can probably be the most daunting to look at. But just playing around with the tech and figuring out, hey, is this something that feels right? Just by touching the tech, you can get a sense of this. And if you want to dig deeper, most of the code is open source.
That is a very clear, detailed way to look at it, almost like you do this for a job. Diran, do you have a story or one more thing I have to mention? It's okay to get rugged. I think that's what I'm going to use as the title for this podcast right here. Quote. Do you have a story or an example of a trade where you've managed to connect all of these factors together and make a good investment, a good trade, or even a good analysis yourself where you've managed to spot something in advance? Because I find there's a lot to be learned from a real example or story.
Yeah, for sure. So on a personal basis, I'm not a great trader. I'll admit it first and foremost, and I'm not a finance person. Instead of giving an example of a good trade, I'll give an example of a bad trade. In the same theme of it's okay to be rugged. So last year, Fei Protocol launched. It was very promising as a algorithmic stablecoin. The tech looks solid. And in terms of the three vectors, to me, I checked off 2 out of the 3 in terms of tech. There was a new way of doing algorithmic stablecoin. The network was strong. People were talking about it in a very positive way. But I overlooked crypto economics of how people would behave from day one of the Fei versus Tribe token behavior. So to give folks a little bit of background, Fei is the stablecoin, Tribe is the governance token. And when you invest in Fei, you get some Tribe token. So for me, I failed to understand that, hey, on day one, you're getting all of these free tokens. People will probably want to take a profit off of it and sell right away. So there's going to be a huge amount of sell pressure on it. And the faster that you sell off, the more profit that you make by construct of how the crypto economics, the game theory is designed in the Fei protocol, such that the more it's off peg negatively, so below peg, the more you lose money. You lose essentially in a squared manner. So if it's below 5%, then you lose 25%, which is a significant amount of money. But if it's above peg, then you gain not as much, but you gain significantly. So how whales behaved is they wrote basically bots to just hit the contract like right away as soon as it launches, and tries to do everything. Just sell Tribe to Fei into Ethereum, and get out of the transaction, basically leaving everyone else to sort of hold the bag, but also devaluing the peg to below 1. I think a lot of whales made a decent amount of money, but if you look at it, there's just one single whale that took the lion's share of pretty much all of the money, and everyone else was sort of left scrambling. So the lesson there for me was, hey, I don't understand enough of the crypto economics, and it incentivized me as well to write a bot to wait and just basically do the same thing that the whale does, and just wait until the peg goes back to close to 1-ish, and then sell off my tokens. This is not to say like Fei Tribe is a dead project, but it's just an experience delineating, well, basically just me saying my own experience of not reading the market properly in terms of those three factors, and being sort of left holding my own bags, which is okay. And the reason why I say it's okay, this is the tuition for this school of hard knocks in crypto, if you will. And that goes to signify how early we still are in this space.
Well, I'd probably add to that I'm sure you were playing with an amount of money which wouldn't have been devastating to be rugged on, which is a great precautionary measure you can take. Even if you are going to get rugged, make sure you put an amount in that's, I don't know, 5% of your portfolio, whatever risk management you like to take, whatever's okay for you in your personal situation. So did you end up actually building the bot and then a profitable bot that you could use yourself?
I didn't end up profiting. The bot basically taught me how whales or sharks behave in this space, and allowed me to exit without too big of a loss, in the sense that I still lost money because ETH just went straight up, but I probably would lose more if I didn't have a bot to allow me to exit in an automated fashion.
As the crypto industry continues to mature, it's natural that more and more wealth-building platforms will arise. The problem with many of these, however, is that they are often so complex that it disincentivizes people from using them. This is why I've partnered with Nexo, one of the top crypto lending platforms in the world. With over 1.5 million users and 15 billion assets under management, Nexo combines the yield-earning features of crypto with the familiarity and ease of centralized finance. Nexo allows you to earn interest at a competitive rate on crypto and fiat. They also allow you to take out loans using crypto as collateral so that you have access to cash without needing to sell your investment. You can even trade directly on the web platform and mobile app in an intuitive and secure way. If you're looking to embark on the journey to financial freedom whilst minimizing time and frustration, I highly recommend you check them out by visiting nexo.io. That's nexo.io. So now that the market conditions have turned quite a bit from what we've had the past 2 years, which 2020, 2021, since the March 2020 crash has been nearly up only, does the way in which Messari as a company operates change at all? I'm sure depending on market conditions.
So we've been through many bear markets at this point. When we entered this space 2018, it was at the height of ICO boom, and we quickly went into a bear market. Deep 2018 all the way till 2020, and we've been through a number of these cycles, ups and downs. So if you will, in a sense, we're combat veterans of these cycles, and it really doesn't affect how we think about things. We like to think strategically on the long term, and long term we're very bullish around crypto, but also very bullish around information in crypto, because we think that people over time will organize more and more in a decentralized way, and it's going to be a more efficient way to organize various communities around in the forms of DAOs, or whatever that incantation becomes of people coming together, believing in a specific project protocol, organizing around it, and allocating funding in order to perpetually iterate on the improvement of that protocol. We're super bullish on it. And for us, it's making sure that people have the tooling necessary and the information necessary to navigate around the space. And in terms of funding, we're doing super well. So no hair lost there. I would say probably the flip side of this is from a builder perspective. Bull markets are more stressful than bear markets. Bull markets, there's a lot of stuff going on. FOMO is a real thing of, hey, there's just so much shiny things that attract attention, whereas bear markets are just perfect opportunities for builders. You can just hunker down, build, and ship great, delightful products.
Yeah, not having the experience Messari team has for sure. One of the things I struggled with during the last 2 years was picking one thing to focus on and doing that very well. There's just so many opportunities all over the place. I mean, sleeping becomes extremely expensive in those market conditions. So you really got to pick the right opportunities, and also just have the discipline to stay focused and true, especially if you do have that long-term vision. If I know I want to be in the space for the next 5, 10 plus years, and if that's your focus, the short term really isn't going to make that much of a difference, because when you take into account exponential gains over a long period of time versus instant multiples right now, the exponential gains will outperform every single time. I'd love to dive a little bit more into that, Messari's long-term vision on the role of information in the space and how DAOs form. So Messari, you said want to provide the tools and the right information for these projects. Do you have any idea specifically what that's going to look like? Or because even DAOs are so early right now, you guys don't know exactly what it's going to look like, but are just iterating towards being the right thing that they need?
Yeah, for sure. So we already have the train tracks laid out for it, so to speak. So taking a step back and building it from bottoms up, what are we good at? We're good at data ingestion, so taking a large amount of data, making sense of it, and data curation, so adding sort of a picture on top of it. And the reason why we're able to do this really well is, one, we have a very strong engineering team, so being able to automate a lot of this stuff, automate a lot of the curation, the parsing, the cleansing, the main model. We also have a very strong research team, and being able to take the raw information and parse out the alpha out of it. And to us, that's a very rare thing, and especially in this space where most people either just go in depth around the technical side or in depth in terms of the research side. And we feel that unless you have a holistic picture of the two, you don't have a full sense of what's happening in this space. In terms of what we already have, we have a quantitative research analytical platform where people can make sense of the various metrics, the various tokens in this space. And we also have research report and real-time alerting on what's happening in each of these projects, and give you a sense of priority as well, of, hey, this chain is going through a hard fork, or this chain is currently having an outage where it's being attacked, versus something that is more long facing of, hey, Ethereum is going to have a major upgrade in 2 months or a couple months, so on and so forth. So we already have the rails for this. The next step for us is allowing people to participate in this space and making sense of first and foremost the governance that's happening around DAOs. So DAOs, in order to make sense of this, even a professional in this space has to open 10, 20 tabs just to follow one specific DAO. Like if I want to follow what's happening on Uniswap, I have to open all of the forum channels, the Discord discussions, plus I need to be aware of the snapshot proposals, which is the off-chain way of voting, the forum votes, and the on-chain votes. It's a lot of stuff for anyone to keep track of. Our governance product is building a string around this and making sense of this as a whole. We ingest all of that information and present it in one single format. Going forward, we want to make sure that people have both real-time reports on what's happening in these DAOs, because effectively they're capital allocators, and you want to know that they're allocating capitals correctly. For example, if I'm creating a grant around Uniswap, and I give all of my money to all of the Uniswap grant money to my friend, that doesn't seem fair. And right now it's very hard to tell because it's just so much that you need to keep track of, and it almost feels like just being burdened by the amount of information. And those DAOs need to be held accountable too. Of, hey, we are trusting you as a community. You should be allocating the money properly, but also making sure that the protocol is evolving and bettering. So making sense of this as a whole, governance, being able to participate in governance, voting, delegating is first and foremost a keystone of this. But two, providing services such that working with these DAOs such that we can give better information to the end user, but also to the institutions on what the DAO is doing, almost like a quarterly report for these DAOs, of partnering with them, doing research on them from a independent analysis perspective, and giving that education to the end user. So we really feel like there's a flyway there, and it's also a combination of quantitative and qualitative data.
I love the well thought out vision. I can absolutely see that. I mean, just the idea of it gets me excited of being able to fully interpret any one of these DAOs, because I've been in that exact situation where I've had to open 100 tabs just to understand what's going on with one system. And the fact that Messari is building in that direction and can be that one source to bring it all together, as well as, I think you mentioned, also educate people on how to do that themselves if they want to do it themselves, so they don't even need to rely on a third party either is fantastic, really. And I'm looking forward to seeing how that plays out over the next few years. It sounds like it's going to become an essential service. Diran, as we close, get to the end of this podcast, there was one topic I had to talk about. I didn't want to quite go over, and that is, so we're in a crazy 24/7 space, especially in the bull market. But I remember it was said on our emails before we exchanged that you absolutely adore hiking and mountain climbing. How on earth do you find time for hiking and mountain climbing during these market conditions?
So I think I forget who said this, but everyone needs some wartime and some peacetime. So everyone needs some struggle in their life, and everyone needs meaning, but everyone also needs some calm, peaceful times. For me, the mountains fulfill both, in terms of it's a big struggle from a physical perspective, but it's super soothing and calming from a mental perspective. So I both want to add some struggle to my life, such that I can shake the boat a little bit, such that when the tides do go up, I'm prepared in anticipation for it. But also it helps me clear my mind of, hey, I need to think about strategically, tactically, how to approach the space, how to make sense of crypto, and also how to think around the various ebbs and flows of the trend. It's good to have a little bit of retreat. So how I do it is I generally have a disciplined morning. So in the mornings I wake up, I go for a run, and that sort of gives me my endurance feel of the day. And on the weekends, I generally find a day to go hiking in the mountains. And then another trick that I think is good that I forget if Tim Ferriss was the first one who mentioned something like this, but plan a trip ahead of time. Plan something 6-7 months out, such that you can look forward to it. So for me, it generally tends to be some nature stuff, such that if things do hit rock bottom or you're in a downturn, there's always that like thing to look forward to. And for me, that's what nature and the mountain provides.
That was similar to the way I look at physical activity myself. It's a huge part of my life, and it sounded like Stoic philosophy that we somewhere along those lines, needing that struggle in your life, times of struggle and war and times of peace, and you're getting both from that. It sounds like you've got a very disciplined routine and day. Could you break down a little bit more, like what sort of productivity tips you use throughout the day, what your schedules tend to look like?
Yeah, my schedule is a mess. it's a lot of meetings these days, and making sure that everyone is in a good place, and also jumping into various small fires or big fires. I think there's always some stuff going on around the technology side of things, but as long as, to me, it's important to have one day or maybe half a day during the week of being able to do deep work, whether that's being able to think strategically, whether that's being able to dive into some code and write some code. And the rest of the time sort of being, I generally like to bucket things as just in big blocks of, hey, in the morning, I get my physical activity in. Then I'll do some thinking in the morning, and then a giant block of meetings. And then at night, I'll do some thinking as well and recap on the day. So generally 4 days a week is somewhere around that vicinity. And then 1 day a week, maybe I'll get half a day. Maybe I'll get a full day to think strategically and do some writing as well, of just putting my thoughts down and organizing them together.
So writing, you like to separate your day out into big blocks. It doesn't sound like you plan it out to the 5-minute intervals, but rather this is the meeting time, this is the thinking time, and then let that become what it becomes. And you said 1 day a week you try to leave half a day for deep work. What do you mean by deep work?
Yeah, deep work, that is either, so this is basically just uninterrupted time where I think about something or do something. So think about something that could be making sense of this crypto space, thinking about playing around with a new technology, learning about this space, doing something, meaning writing physical code or writing for, basically either writing for machines as an audience or writing for humans as an audience. Both help me organize my train of thoughts, and also helps me just keep sharp around my skills and abilities, because one of the things that I don't want to miss, and I feel like as leaders we don't want to miss neither, is our finger on the pulse of technology, and it's very hard to lead without context. So that's sort of the bucket of time of dedicated to stay on track, stay in touch, but also we want our leaders to be able to lead from the front. So if needed, I'll jump into whatever fire and work with other folks on the front lines in resolving that and and working as a group to do it, as opposed to me sitting in the back and letting other folks deal with the problems.
That's really profound and something I've been spending a lot of time thinking about recently as the team, our team is growing larger and larger. The highest leverage thing you can really do with your time is just be up there, be as lazy as possible, sit back as much as you can and try to make the right high leverage decisions as much as you can. So you're working, but I don't know, I'm reading the Effective Executive right now by I think Peter Drucker, and I don't know if I butchered that name, but it talks about like how the most effective executives are just you have to fight everything you had before you got to that position, and it's time to now be lazy. Don't get and do stuff. Try to outsource absolutely everything you can and then continue to outsource it again and again. But what I found when I go too far into that direction is you lose that finger on the pulse, that context on not just what people are doing, but the actual inner workings of the business itself, of the market, because you're not in the trenches gaining that firsthand experience. Was that something you had to learn because you also went in that direction? I don't know. I feel maybe you went through a similar journey at one point.
So I think learning by trials of fire is probably my lesson. Not everyone is obviously. I don't think I've ever veered so far off that I lost context, but I've definitely had mishaps along the way of learning to lead people, learning to be the right mentor for other people, and how to be effectively a good mentor, a good person who's able to give out ownership, give out a lot of autonomy to team members, but also be there sort of as a almost like a parachutist. You're in the air and you can parachute wherever there's a fire. I think I had to learn that by failing basically, and seeing, for example, certain fires bubble up and getting to it too late, or more times where I could have done much better. And over time, that's been what's calloused my understanding of what my role is. But in terms of the context aspect, I think the one thing is the space moves so quickly and it's very easy to go stale. And I think this one comes from both personal friends in both traditional tech losing context, but also seeing other folks, colleagues in this space losing context as they've maybe just gone too abstract in one way and losing the context of where the space is going as a whole.
Yeah, I didn't even think about the fact that you've been in the space so long that you're going to have been able to have seen these things happen to other people. So you don't actually have to just learn from first-hand experience, but you can also study and view secondhand. How big is the Messari team right now?
Yeah, we've grown significantly. So the engineering product team is about a dozen folks now, and the team as a whole, I think we're approaching 80. It's hard to keep track these days because we're growing so quickly, but it's a great problem to have.
Yeah, in 5 years, that's definitely trial by fire, learning how to manage that. Diran, thank you so much for your time. This has been an absolute pleasure. Great episode. I love talking to you. Is there anything you'd like to leave our listeners with as we close this out?
I would say final thought, this space is still super new. We're still very early. There's more and more talented, smart people joining this space. And it feels like whatever this ebbs and flow in the current market is, whether we're continuing the bull market or whether we're dipping into a bear market, it's only temporary, because at the kernel, there's definitely something there, which is the decentralized nature, but also being able to add an element to our digital life, that element of both scarcity, ownership, and organization as a whole, going from open to close to open, that there's definitely something there. So I'm just super excited about the space, and super excited to see what the next 5 years looks like.
I share that excitement for the future of the space. There's opportunity for everyone. Get involved. The meditators, that's going to be all from us. We'll see you next time.